The Great Energy Rift. How a 2025 US-Canada trade war reshaped the global order. Welcome back to LCC News, your trusted source for the most pressing stories shaping our global future. Today's report goes beyond headlines and soundbites. We're diving into an economic standoff that's not just straining diplomatic ties between the US and Canada, it's redrawing the map of energy alliances and shaking the global economy to its core. In early 2025, a decision by then-President Donald Trump initiated a chain reaction no one fully predicted. It started with tariffs and escalated into one of the most disruptive energy disputes in North American history. But more than just an oil crisis, this is a story about trust, sovereignty, and the struggle for control in a rapidly shifting geopolitical landscape. The relationship between the US and Canada has long been defined by cooperation, shared values, and deep economic interdependence. Trade between the two countries exceeded $850 billion in 2024, but in January 2025, everything changed. President Trump, in a surprise move, announced a 25% tariff on Canadian oil, lumber, and agricultural goods, citing the need to protect American jobs and American energy independence. Canadian officials were blindsided. There was no consultation, no prior warning. The sudden imposition of tariffs stunned markets and shocked even many of Trump's Republican allies, who feared retaliation. Within hours, Canadian Prime Minister Chrystia Freeland called the measure a betrayal of one of the most stable trade partnerships in modern history. Canada responded swiftly, suspending all crude oil shipments to the US and freezing several key export agreements. This wasn't just tit-for-tat diplomacy, it was economic warfare. The fallout was immediate. Refineries across the American Midwest, many of which were configured specifically for Canadian heavy crude, scrambled to find alternatives. By March, gasoline prices had risen by 60% in major US cities. Diesel costs surged even higher, hitting truckers and farmers hard. In the Canadian town of Windsor, Ontario, the local car assembly plant, heavily reliant on US parts and distribution routes, shut down. Nearly 5,000 workers lost their jobs overnight. In Montana and North Dakota, American farmers who had long relied on Canadian fertilizer saw prices skyrocket and shipments stall. This trade war didn't just affect corporate profits. It hit working-class families in Detroit, Calgary, Houston, and Vancouver. It deepened the already widening divide between urban and rural communities, and it raised new questions about what economic patriotism really means in a globalized world. As tensions with Washington escalated, Canada looked eastward. China and India, both eager to secure long-term oil supply deals, saw opportunity. By mid-2025, Canada signed a $40 billion 20-year oil export agreement with China, bypassing the US entirely. Canadian Energy Minister François-Philippe Champagne praised the deal as a new era of independence for Canadian energy. The Indian government, facing its own fuel crises, quickly followed. Within months, Canadian oil was flowing across the Pacific, rerouting trade lanes that had been stable for decades. Meanwhile, China and Canada announced joint development of Arctic energy reserves, areas once considered too geopolitically sensitive to touch. In short, a strategic divorce was underway. The US had forfeited its place as Canada's primary energy customer, and that void was now being filled by America's economic rivals. Domestically, the political cost began to mount. In battleground states like Pennsylvania and Michigan, voters were feeling the pinch: higher energy bills, layoffs in manufacturing, rising inflation. President Trump's approval ratings dipped below 40%. Progressive lawmakers like Reps's Greg Casar called the tariffs a reckless attack on the working class disguised as nationalism. Meanwhile, moderate Republicans like Senator Lisa Murkowski, who represents Alaska, a state deeply affected by the energy downturn, urged the administration to reopen negotiations. Canadian media, once restrained, began openly criticizing the US government. Editorials in the Globe and Mail referred to America as an unreliable partner. Trust between the two nations, carefully built over centuries, was disintegrating in real time. The American energy sector, already under pressure from climate transitions, began to buckle. The loss of Canadian crude created logistical nightmares. Gulf Coast refineries, which relied on blending Canadian heavy oil with lighter domestic crude, saw productivity collapse. Major airlines like Delta and American reported a 15–20% increase in fuel costs, leading to higher ticket prices and service cuts. The trucking industry, responsible for nearly 70% of all freight in the US, was paralyzed by diesel shortages. Healthcare systems in rural areas, already stretched thin, faced rising fuel costs for ambulances and supply chains. In Texas, rolling blackouts hit several counties, blamed on natural gas supply disruptions. Wall Street, once bullish, turned bearish. The Dow Jones fell 9% in a single week in April 2025. Investor confidence evaporated. Hedge funds began betting against US energy futures, while oil companies trimmed earnings projections across the board. While the US reeled, global observers took note. European Union leaders, long wary of US energy dominance, applauded Canada's shift toward Asia. France and Germany called for a more balanced and diversified global energy order. China's state media framed the events as a failure of American diplomacy and a triumph of multipolar global energy cooperation. Russia, watching from the sidelines, offered discounted gas to American buyers, an ironic twist in the post-Ukraine world. The World Bank and IMF issued joint warnings about global instability stemming from the North American trade rupture. Oil importing. Countries in Africa and Southeast Asia saw dramatic price swings that threatened their fragile economies. By the fall of 2025, a new geopolitical reality had set in. Canada no longer depended on the United States for energy exports. Asia had become its largest customer. Meanwhile, American efforts to replace Canadian oil with domestic sources and Middle Eastern imports proved costlier and more complex than anticipated. At the same time, environmental groups in both countries began to push harder for renewable transitions, citing the instability of fossil fuel diplomacy. The Canadian government announced a major green energy initiative funded by revenues from its new export deals, while US climate legislation stalled in a divided Congress. This was more than just a trade dispute. It was a lesson in how quickly alliances can fray, and how energy, long seen as a technical issue, is now central to geopolitical power. Could this rupture have been avoided? Perhaps. Many experts argue that diplomacy, transparency, and respect for bilateral institutions could have prevented the crisis. But the deeper question remains: what does sovereignty mean in an interconnected energy world? For everyday Americans and Canadians, the consequences are still unfolding. Whether it's higher gas prices, lost jobs, or a changing global role, this trade war has rewritten the rules. As we approach 2026, the US and Canada find themselves at a crossroads. The old world of simple trade agreements and easy diplomacy is gone. What replaces it remains uncertain. At LCC News, we'll continue to follow this story, tracking its ripple effects across every sector, from energy to politics to the very foundations of trust between nations. This is not just about oil, it's about people, it's about power, and it's about the path forward. Thank you for staying informed with us. Make sure to subscribe to LCC News for more in-depth stories and analysis. Together, we can decode the world's most important challenges and chart a better course for tomorrow.